Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide online valuation services for mediation and litigation based in St. Louis, Missouri. Today, we'll be discussing business valuations in divorce and the discovery process with Catherine Shanahan. Catherine's a Certified Divorce Financial Analyst, or CDFA, and Daily Money Manager, or PDMM. She also has a lot of other credentials, and she is the co-founder of mydivorcesolution.com. She's been trained in mediation, collaborative divorce, and financial planning. She is fully dedicated to helping clients kind of navigate through the divorce, including kind of understanding their financial future post-divorce. Welcome, Catherine.
But the other question I have for you, and I find interesting, is it's really hard when we're gathering the documentation. And for most of the people who are very forthcoming with giving this information, and you'll see a bank statement that's in the business name that has $50,000 in it. So the one spouse says, well, you have to give me $25,000. And the other one says, no, that's going to be part of the business valuation. How do you explain that to a couple?
Well, I think that part of the business valuation process is trying to look at it a couple different ways. You know, what's the cash flow to the business and an income approach? And what's the cost approach or asset approach is what's on the balance sheet. And cash is traditionally on the balance sheet with accounts receivables and inventory and things like that. So the cash does come into play in the valuation. And it may be that some cash is used to equalize the property, right? It doesn't necessarily mean that half of the cash comes out of the business. It means that part of the valuation will include the cash that is in the business. And a lot of times people don't understand a concept called net working capital. And so net working capital is just basically like most of us, you know, we're both business owners. Most of us feel very comfortable with a certain amount of money in the bank that we can go forth and we can pay employees, we can pay rent, and we can do all of those things. And we're not worrying about money every single day. There's also metrics to compare how much you have compared to another company. But everybody gets kind of caught up in well, this business is just me. If I walk away, this business is worth nothing. They're not going to get anything. And so the spouses start to say these things to each other. And so the only thing that somebody has to come back with is that there's cash in the bank, give me half of it and I'll go away. And then the business owner will say, well, why should I give them anything when they broke the marriage? It's their fault that we're even getting divorced, and I'm not going to give them anything. Both of these positions mean nothing in court. You know, the judge isn't going to say you can just walk away from a business and that it's worth nothing. The judge isn't going to say that everything is the business, but there are some that are a lot connected to the owner. And so it's really what happens when you're in this situation of divorce is both people are making assumptions that are probably incorrect. And that's why there is a lot of occasions where we'll come in as the joint expert and we will work for both parties. And what that does is that a lot of times, every time I'm presenting things about the numbers, I'm presenting it with both of them. Because there's some things that I'm going to say that are just kind of truth in how the divorce process works, that one person's going to be like, well, that's not in my favor. And the other person's going to be like, that's great. But if they hear it at the same time, they'll understand that it's just the information. It's not necessarily my opinion. Like, I don't have an opinion of how the judge is going to decide your case, but I have experience on how they have done things in the past. And so in that respect, it's educating them. You know, a lot of your process is educating them on the financial picture. A lot of the valuation process is educating them on how the valuation comes into that personal balance sheet and all the things that you've talked about. Most people do run expenses through the business. So if you can show those bank statements to the other spouse and they can look through and say, oh, you just went to McDonald's and oh, you went to here and here. And they can see that there's nothing really there that they're envisioning. That starts to calm everybody and bring it down. So really communicating information in a transparent way will change the divorce process for a couple. and it doesn't have to be as much fighting, I think.
Oh, I totally agree with you, which is why I love working hand in hand with you. Your process with ours is because giving our opinion or our recommendations and considerations is not an opinion. It is recommendations and considerations for the couple. And when we can have a couple, our ideal client is when they both come in together. It's not always the case, but when they do both partake in the process and they hear the review and they hear the assessment, they know what they're dealing with moving forward. It's really like cut to the chase. Like, show me what we have, what's our options, and now we can move forward. Whether it's an uncomfortable position for yourself or not, which it will be, because divorce is never comfortable for both sides.
Right.
You get to move forward in just such a better way, and you save so much money, time, and stress doing it that way. Because it does have to come out eventually. I mean, it eventually comes out. But like you said, when you're showing these statements, okay, yes, maybe I did dissipate some assets. Maybe I did take $10,000 and take my boyfriend or girlfriend out. I don't know. Or maybe I did just waste it on myself. Okay, I'm going to come clean in here. How do I get us even here? Because it will come out. And then otherwise you're showing something and no, you went to McDonald's. So did I. Okay. We did it through the business. Now we have to stop doing that. And now we have to figure out what's the value here and what's the income stream here.